Everyone, Coach Investor, back on our Tesla weekly video for today. I hope you're all having a wonderful weekend so far. So it's been a pretty good week for Tesla. It's been a pretty good week for the overall stock market as well. It seems that interest rates have peaked. It seems that we're going to get 3 rate cuts in 2024. And so the stock market already reacted positively. Now, in this video, I want to touch on numbers out of China, some numbers out of Europe, and maybe some concerning ones as well. Comments on 2 analyst notes that we've got this week, and I'll share my opinion on the Optimus version 2 and why this is going to be an extremely exciting thing to watch for 2024 and onwards. Then some announcements towards the end of the video. We'll end with the graph. Now, since we're nearing the end of 2023, I just wanted to thank everyone that has supported me and this channel throughout the year. This year has been actually a pretty good one for the channel. So again, thank you very much for all the support. I started this series, Tesla Weekly, because one, Tesla is my largest position. It's an extremely interesting company. And I know most of you have Tesla in your portfolio. So I thought maybe a weekly recap of what was happening would be a good thing. And to be honest, with the reactions that I've gotten each and every week, I think I made the right move. So thank you everyone for the support. If you haven't done so, leave it a thumbs up, subscribe to this channel. We're going to make 2024 an even better year for you, but also for this channel. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to full.com/couchinvestor. Thank you very much. So first things first, the China weekly insured numbers, they came in at 15,400. I know there was some confusion. Maybe it was 14,800, but no, this is the number. It's up 7% quarter over quarter, up 34% year over year. Yet it's a bit lower than last week, but currently we're still on track for a record quarter. Then with regards to the mix, we can see that the drop week over week comes from the Model Y. We can see that the Model 3, the refresh, is still flat when it comes to the volume that we're getting here. So, okay. Then according to Troy Teslaik, he said that Giga Shanghai production is expected to be a new record in Q4. Model Y to Model 3 ratio last year was 1.77, so which means for every Model Y they make, there is 0.77 Model 3s. Now apparently this year the number is going to be around 2.07, which means Giga Shanghai makes twice as many Model Ys as Model 3s. Of course, with the Model 3 refresh, this was bound to happen, but just so you know, Model Y higher margins than Model 3, and maybe we might see a reacceleration for the Model 3 refresh, remains to be seen. Now, moving on to Europe, we've got some data there for Tesla's market share in various countries. This is from Piloli on X. So this is Tesla market share per country in November. You can see Iceland at 48.3%, followed by Norway, Ireland, Denmark at around 14 to 16%. And then you can see all the rest trickling down. If you want to see the big countries here, so we got United States at 4.1%. Germany 2%, Italy 2%, United Kingdom just 1.1%, and France, almost forgot those guys, 6.1%. Now moving to Germany, because it is a big market, it's also where Giga Berlin is at. So German car sales by top 30 brands with BEV shares from January to November. So here you can clearly see that Volkswagen has actually had a nice increase, so 38.9%. Number 2 is Tesla with just a jump of 13.8%. So yeah, the weakness in Germany is pretty visible. We have been seeing this actually for the last couple of months. The results in Germany this year aren't that great, which is why you can see this. So Tesla sales in Europe, this is from January to November. So Germany last year, big increase there, so maybe that's why the year-over-year comparisons are a bit strange, but still most of the other countries have seen an increase from 2022 to 2023. But yes, it is true that the big markets such as Germany and United Kingdom are lagging this year. Of course, remember, with interest rates peaking, with some rate cuts coming next year, I'm talking now about the United States, by the way, maybe in Europe the same thing might happen, more demand for cars should be the result. More demand for solar as well. Solar installs, for example, the likes of Enphase, SolarEdge have seen their share, their stock price already go up by quite a lot, especially Enphase. Remember, not so long ago, the shares were at around $70, $80 or so. We're now closer to $120. Again, the stock market is forward looking. So we're not looking and waiting towards a rate cut. No, the stock market was looking towards a signal towards a rate cut, and we definitely got that. Now, moving on here to the analyst notes. So first up, we've got here one from Guggenheim analyst. Ronald has raised his price target on Tesla to $132 from $125, still maintaining a seller rating. Now, just an FYI here, Ronald is ranked 6,597 out of 8,636 Wall Street analysts by TipRanks. He has an average return of negative 7.2% per stock rating. If you want to read the whole note, please pause the video. Then moving on to Morgan Stanley's analyst Adam Jonas, who basically releases these analyst notes as a blog, because we've seen quite a lot in recent weeks and months. So he says here, Tesla sits at the epicenter of a potential Cambrian explosion of technology, ushering a new morphological era. He obviously talks here about AI, Dojo, the robot, etc., etc. Now, for those that are interested, Cambrian explosion is the unparalleled emergence of organism between 541 million and approximately 530 million years ago at the beginning of the Cambrian period. The Cambrian period is the time when most of the major groups of animals first appeared in the fossil record. See, maybe we're turning this channel into a National Geographic one. Now, going back to his note and his comments on the AI, Tesla, what's going on with the Optimus V2. Now, if you haven't watched the video, I'll pull it up right now. Hopefully I won't get a strike, because apparently lots of YouTube channels have gotten strikes by someone that isn't even affiliated by Tesla. But okay, let's try it anyways. It's pretty insane how fast this has evolved. I mean, from the presentation, from the first time we saw the Optimus bot until right now, V2, this is only V2. The rate of progress here is incredible. Now, I can't imagine how this will look like 1 year from now, 2 years from now, 5, 10 years from now. I mean, this is truly incredible, especially what they've done with the hands. Because making a robot body, fine. But the hands, the fingers, the touch, that's what's the most important one. And Elon says, of course, this is Elon Musk's timeline. Shouldn't really rely on that. The bot might be able to thread the needle or something like that. But to me, the most important thing here, can the robot fold my clothes? If it can, I'll buy one. Now back to the serious stuff, finishing on this topic. If they can prove that Optimus is actually capable of doing quite a lot, not just dancing and putting eggs here in this box and that box, if they can actually prove and show other companies how effective this bot actually is, there is going to be so much demand for this, because there's no company in the world right now that is going to see a robot do effective tasks and say, nah, we don't need that, we'll stick with the humans. There's going to be a lot of demand for this product. Of course, there's going to be the question, what do you do with the human employees? Do you fire them? There's going to be a lot of unemployment, universal basic income. What are they going to do? Are they going to be on TikTok all day? It's going to create chaos, etc., etc. It's a big question. Maybe we have to talk about that in another video. Anyways, share your thoughts down in the comments below. Moving on to Tesla Mexico, we've got here some positive news. Tesla secures incentive package for Giga Mexico. So apparently they're going to get approximately $153 million from the Mexican state of Nuevo León. According to a statement from the government, the incentives encompass a range of initiatives, including the creation of essential infrastructure such as roads and water treatment facilities. Additionally, Tesla will benefit from a reduction in payroll taxes. Now, when will the construction start? We actually don't know. Last couple of things here, unfortunate news. So Tesla announced that the federal 7,500 EV tax credit will end entirely for the Model 3 rear-wheel drive and long-range delivered after, well, basically the end of this year. And here comes the interesting part, because Sawyer Merritt actually compared what will happen with the Model 3 and Model Y after this comes into effect. So you will have some weird pricing here. Model Y rear-wheel drive will come in at $36,490. This is including the $7,500 EV tax credit, which is going to be extremely close to the Model 3 rear-wheel drive without the EV rebate. The same can be said here for the Model Y long range, Model 3 performance. The pricing here is very, very close one to the other. The same with Model Y performance and the Model 3 long range. The pricing here is also very, very close with one another. Now you might say, okay, but we are expecting to see Model 3, the Model Highland refresh next year in the United States. Maybe that's going to make a difference. Well, if it's going to be the same as with the rest of the world, the Model 3 Highland should be a bit more expensive. Now, whether or not it will get tax incentives here, I don't know. But if you're making it more expensive, then it's again competing with a Model Y. So is the Model Y going to get more expensive as well? What's going to happen here? Or the refresh Model 3 is not going to get more expensive. It's going to be less expensive, and then you have that bigger difference in the pricing. It will be interesting to see what Tesla does with pricing next year, because right now I do think that they have a little issue here. And last thing before moving to the graph, you've probably seen these headlines this week. Tesla recalling 2 million US vehicles over lack of Autopilot safeguard. So this was again a over-the-air software update. This is not a total recall, but hey, clickbait headlines sell. And so we've reached the end. We're now at the graph segment of this video. As you can see, we started the week. We got a nice little support here at the 200-day moving average, which is still at the $230 mark. Then the positive comments from Fed Chair Jerome Powell has pushed this stock back up over the 20 and the 50-day. We're now sitting at $253.5. RSI is still in the neutral area, 56.1. The next resistance point is going to be around $280 or so, where we got rejected a couple of times back in July, and then pretty close here in mid-November as well. So to conclude, after a roller coaster of a 2023, I do feel that Tesla is positioning itself for a pretty good 2024, whether it's continued growth in the energy segment, new growth with new product launches for the automotive segment, Model 3 Highland, Cybertruck. I hope we're going to get some positive news with regards to the Tesla Semi, but I mean, my hopes are not that high anymore. But then again, the bot Tesla AI Day 2024 is probably going to be very, very exciting. FSD, whenever that will get launched or put out of beta, I don't know, but 2024 is going to be a year full of surprises. Interest rates coming down, more demand for car sales will help a company like Tesla and other EV car makers as well. Let's wait and see. We still have 2 weeks left, 2 episodes for Tesla Weekly. So for one of the last times here, if you enjoy this type of videos, leave it a thumbs up, subscribe if not, and I'll see you all in the next one. Bye bye.